Okay guys, on to lesson 15. So in the last lesson we went over the GBP AUD on a intraday perspective, and we mapped out some of the highs, some of the lows, and I showed you the session times in which we need to follow and be aware of. So let's go on to gold. What I've done from last week, 28th of October, the entire week I've marked on the sessions as to where we closed right here, 10 p.m. And I've also just gone ahead and marked on so on and so forth. So let's see how we can break this down to get a further understanding on the gold movement. So that is what the week looks like. If we go over to the higher time frame and look at the analysis over here, firstly, the market, we had a little bit of a pump, then we closed back below 15.04. We had this mini little right shoulder here on the 4 hourly, and then the price was driven all the way back into the lows. Now, if you remember, 1480 serves as the weekly support, and we also have the 4 hour area of liquidity from way back, in which the market has respected quite a few times over. But as you can see, all of these closures have happened above 1480, which is the weekly area of support. Now last week, price dumped into, and I found this newly found area of an A to B zone, A to B, as to where price volume started to pick up after this area. So I took the, let's move this across, I took the body of the candle, the first one before the boost, if you will, brought it across. Market did respect that to some extent, but then we drove a little bit lower, and we had the FOMC announcement, which was this candle right here, where it actually broke the previous lows, and we can break this down to a decent extent on our intraday time frame. That markup, we can put markups on which we'll bring all of this together for us afterwards, but again, I'm just going to go over the overview for the moment. Then as the market closed back above region 1 and region 2, it started to move back to the upside into 1510, which is our 4 hour, hourly purple line right there. And as you can see, we're still trading above that. Had a small pullback, and that probably retested this high here. If you put the crosshair at the bodies of the 4 hourly, you can see where it's tested 1 and then 2 again, and now I'm looking for price to continue to the upside. What's also quite important here is the daily. The daily, as you can see, the daily closure, we have the bullish engulfing straight off the region, tweezer bottom, but we stayed above the weekly, as you can see right there. And then the next day on the Thursday, and then we had Friday, we had a very simple upside move, which I'm now looking, as you can see here, 1, 2, 3, 4, 5, 6, 7 wicks. But then what we can see is that the daily is actually now closed back above the 4 hour purple region. The purple region. So for the week ahead, before we get into the good stuff, is we can see the spike. We've had so many spikes across this region now, and I think gold is ready to catapult back to the upside, and I have my eyes on 1550. Why? Because it is a 4 hour region, as you can see there, before this huge downside move. So yeah, 1550 is the area I'm going for long-term targets. And when I say long-term, I mean higher time frame. So that's the bias. We're looking for upside moves. Obviously a lot is going to happen in between, and that's where we can get busy with the intraday charts. So what I've just explained there, as the market's pushed into 1485 and we have that huge, if we go back to the 4 hourly, that huge spike, let's have a look how this looks on the lower time frame. So again, I've got my markings on there. I am on London UTC. And yeah, let's just start from the week open really. So going to Asia, let's have a look at Asia. So market opens at 10 p.m. 11 on gold, 10, 11 on gold, anywhere around here. Asia creates one high, Asia creates a low, Asia creates a secondary high. So this is the high of Asia, this is the low of Asia. So going into this, and what you can also do, guys, down the line is you can play around with the moving averages on these charts and whatever you feel, you know, suited and fit to use in alignment with all of our information. Go ahead and place it on there and have a little bit of a play around. You are going to find your feet and also merge your own style into this. I'm just showing you exactly how I would read the market. So taking that across, okay, so I've gone from the bodies down to the wick low. That's the low of Asia. I can just simply copy and paste this and go up to the highs of Asia right there. It's a little bit wider. There we go. So what's happened is Asia's created some liquidity, some volume, gone up to the highs. Okay, London open, we've pierced, but we haven't really breached Asia's lows. It's respected Asia's lows for now. Then what we can see on the 15-minute time frame over here is that it stayed within the boundaries of Asia low and Asia high. Then it's consolidated. The consolidation, as you can see, it's making mini lower swing highs. It's been driven into Asia low, whereas it's trying to make up its decision and its move. This candlestick did not close very well, and then we broke Asia low, we retested Asia low, and then for the rest of the London session we've dumped. So that is a standard, simple, clear and concise breakout pattern. Okay, simple and concise breakout pattern in which the market has respected and then dumped into lows with a closure on London. Well, the London low is 1490. 1490. The London high is 1507. That's 170 pips from high to low. Then what we see, if I combine this and look at the movement, okay, so this is the high here. So look at this. The bearish engulfing steps in, then the price drives into this region. Okay, again, keep an eye on what's here on the 4 hourly. That's why we have to do this in a very clean and precise manner. So price drives all the way in, which leads us into this area, and that's where the spike, so money is now leaving from A to B, and you can clearly see it with the spikes. I personally thought that from what I was reading here, gold was about to shift back to the upside for the next few days or so, but we didn't, unfortunately. Made this high here. Okay, so we'll break this down in a second. Then dumps one more time, but dumps into 1485 and dumps into our original lower boundary there, the lower liquidity region, the thick point. So anyway, let's go back to this chart and open up the highs and lows of the next sessions. So London low, and then we also have US low here too. But what I'm going to do is London low, because again that's quite a thick boundary. I only want to keep it more or less like that, to be fair. And then over here, I'm not going to do the boundary from this candle into the wick. We can clearly see that we more or less have an equal low there, so we can bend the rules slightly because it's just a few pips, and we can just bring this across. But what we can actually see is the low of London. Okay, we've already looked at the high of London. The high of London is here. I'm not going to mark that on now because it's irrelevant to current price. Excuse me. It's irrelevant to current price. However, what I am going to do is look at the highs of the US session here. Then we have the gap in between 6 p.m. and 10 p.m. Then we have Asia once more. Asia makes a high. Cycle continues. So anyway, the US session high, I'm going to take it as this area, very, very thin point. I'm also gonna because we're in consolidation, I'm going to draw on Asia high right there as well, because these points may come in handy for the future. So Asia consolidates, US consolidates, we have the consolidation phase between 6 and 12. Asia consolidates, Asia does a false breakout high. You can't really map that anywhere because it's in more or less no man's land. But what's very, very interesting is Asia makes the high. We have the session rollover right here, but look at London. Let's zoom all the way in. So we've got Asia's high, we're in London. London respects it 1, 2, 3 times. Then London breaks through the US session highs, as you can see here. We have a bit of consolidation going on. We break down, and then the market absolutely bolts to the downside. Okay, melts. We have this huge sell-off, and it's quite easy to spot. We have 1, 2 pins into 1494. We have 1495 just above a psychological level, and then we have our final test into that region. And then we have the small bearish engulfing, and then market collapses. So just by focusing on the fine details and London respecting the session high on Asia, and again, the way we're breaking this down with the timings, and you're going to see this time and time again yourself, moves like this, where people think, oh, we could have never spotted that, it's fundamentally driven, etc. They're easy to spot on the chart. Okay, so what happens then is London, we dump gold 1494 into lows of, well, London lows are actually 1483, about 100 pips, 90 pips or so. But what happens is, okay, on the dump, we have the retest, and look where we retest, guys. We retest previous US lows. So London, okay, just before 8 a.m, Asia makes the high. London respects the high. London respects the high, and then we get the sell-off. The sell-off breaks the consolidation area, and if we look at this sell-off on the higher time frame, this is the sell-off right there. But again, this price momentum, if you will, for the London session drives it into the lower boundary of 1485, and we can see the spiky price action. So we have 1, 2, 3 lows, and it's here represented as 2 clear pins, and you can see the market starts to pick up. We come back out of the region. Right here we have this, if you look on the left hand side, right here we have pin bar. Then the market continues to drive into the upside. So anyway, looking at the fine details for the next few sessions, we see, number 1, a test of US low, back to the downside. US session, price forcefully boosts back up, and look where we test. In the US session, they respect previous London lows over here. Here on the overlap. This was a London low after the first initial dump of the week. We respect London lows, and we come off that, and we respect again US lows, and then we start to consolidate. What's important over here is that if we look at the price action going forward, we have a few dead sessions more or less. Okay, Asia pretty dead. London, we make the high and low of London. US session, we spike into the high of London, we respect that once more, and then we have this price dump. So let me just go through what all of this means over here. So for now, what I'm going to do is take off all of these areas, and let's start fresh from here. This was quite easy to spot, and so was this. Okay, so the Asia high, we can actually keep that on for now. Respect, respect, respect over here, and then we respect it as support. Okay, London low over here, we can go ahead and we can place that on right there. We do have other areas in between which you will mark out. We have the high of the US session just here. We can go ahead and place that on actually right there. And obviously you have lows here of Asia, highs and lows of London, and so on, but just as a borderline, as an outline, because again, this spike terminated many people in different ways. But let's just get to it and see. I caught this move last week, and then the price completely reversed, and gold continues in its overall gold continued with the overall bias that I had in mind, which was bullish, because I was expecting price rejections into here, and all of these spikes, we can map all of this price action out using what I'm showing you. So price then moves to the upside, and it breaks 1510, hits one of our 4-hour targets, and so on. So the low of London, the high of Asia, we can drag those across. We're in this consolidation phase. Here, London, we open in London, we break the highs of the US session, and we tap into Asia once more. So London, tap into Asia, drop, make the low, and again London is forced back into Asia. It's a repetitive cycle. London and then US, because again the news was at 6 p.m. I believe, just here 6 p.m. Okay, that's why we marked on 6 p.m. because again we're going to get news events there, and we're also seeing people from London go home. Volume may drop in the market. So what we can see, if I just move this out of the way, 1, 2, 3. Okay, go put it over there, please. Put it over there. Thanks. What we can see, 12, 14. So this is a session switchover. US spike right into that area. So let me just put my red line back. Then what happens in the US session? Bear in mind we have news coming up in the next few hours. We can see price boost into 1495, which is a psychological level, but then looking carefully, once price was back below, as you can see here, 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 and the price remained below that area with the spikes going into the high. All right, yeah, 2 minutes, please. Going back into the high at 6 p.m. the news comes out, but we've already had signaling that the US has pushed it through London. We've come back below. Price has remained below that area, and look what the news has done. FOMC dumps gold bang on 6 p.m. We break previous US session highs, and then we get dumped all the way through into 1481, but we also retest the area here, which is the London low, and look what happens straight afterwards. Price comes all the way back up. So there's going to be traders here going short on gold. If any trader is short anywhere in this line of these 3 15-minute candles with stops above the high, then from emotional trading, people are going to be caught on gold, especially on this candle right here. They're going to be caught on late. Anybody who's also been long gold with stops below here, gold has annihilated them. So gold has done a good few things here. Then we've whipped back to the upside. Market is then stabilized because the upside candle and the break, it all happened in 4 hours. The 4-hourly candle breaks back above, and then the market starts to travel back to the upside and continue its original upside move. And then here we've retested this area, and then the market, the new cycle has come through. New cycle has come through. We are now, sorry, 1 second. Few distractions this morning. The market has then opened in Asia. Asia's made a new high right here, and I was actually watching this last week. Asia's high, okay, you got Asia's low there as well. I can go ahead and delete these now. I've explained that process. New low in Asia has been made right here, and what gold has then done, it's broke above Asia. It's retested Asia highs as support in London, and then London have completely just took gold from 14.99 to a high of 15.13. That's 130 pips. So because the London low is the Asia high, so I don't need to mark on that. But over here, the London high, and look at how price at the exact time of 2 p.m. border pulls back. It respects London once more. You're going to see this quite often, guys. You're going to see respect. It comes down to make the low. And what we can then go ahead and do is we can take again, if I was to go from that's too thick for me. Maybe for this example, we can let it off for a second. We have that there. Okay, and that's what we're looking at right here on gold. And the market just consolidated for the rest of the week. So we had respect, low, okay. The high was respected again there in the Asia. Asia respected London highs and US highs. Asia pushed it down into US lows, rebounded. Okay, London pierced the highs there, a simple trap move coming towards the end of the week, and then market pulls back into the lows. Non-farm payroll, guys, again, non-farm payroll, this clear and simple US low, non-farm payroll have pierced the US low again, and then they brought the price back up and they've consolidated there as well. So anybody, you know, more or less anywhere around here where these lows are, market, that they've used non-farm payroll just to stop people out of the market once more, for those people who are going long, and then the market is going to go long again next week. So that's the spike right there. Again, if you put the crosshair at this boundary, you can see where that's came into, but now market is going into 1525 and then into 1550. So news, I hope this is coming together for you now. Sessions will respect sessions. News will be there to annihilate people and take out, again, it's all about psychology, trader psychology. So many people will be going long on gold now after seeing the uprise. I explained what happened here. Sessions were respected, stops were taken out, people were enticed into the market, then stops from the high was taken out. It's all just a big game. So here, boom, that horrendous spike, 1503, 15, that's 70 pip spike. Market swiftly retraces back to the upside, and look where we respect again in the US session. Okay, ding, so on and so forth, so on and so forth. What we're expecting now in the next coming days, if we just flick on the 30-minute time frame, when we get to this on some of the later market exercises, it's golden, because you can clearly see, I love the 30-minute because used in conjunction with the 15-minute areas, you can get real good confirmation. So here, trap move back into the region, 1, 2, 3, 4, 5, 6, bullish engulfing. And now what I'm looking for is a huge breakout in the next few days and gold to continue its overall up move. Looking at this price perspective on the 30-minute, it does become a little bit clearer too. So imagine we had our range on here from the 15-minute, and as you can see, we've got a nice 30-minute 1, 2, 3, 4, 5 spikes into that previous London high right there. Nasty volume generated here on the FOMC. Then the next candle's a huge pin bar on the 30-minute and looks clear as day. Then as you can see here, market is stepping up, breakout, little retest there, and then we're in this consolidation zone and we're looking to go higher. So that is what happened last week on gold, and the session times and some more examples of the session highs, the session lows. Normally the session highs and lows, you can keep them on for maybe 2 or 3 days, but again, you just have to adjust and adapt and more practice going forward, because there is opportunity every single day in the market. Stick with 1 or 2 pairs, 3 at maximum, and get this on rinse and repeat. But you guys, if you turn your chart to UTC, London, wherever you are in the world, mark on these regions and make sure you are up, okay, especially before 8 a.m. I would wake up 6, 7, get ready, and then a lot of these movements can be caught. We can start to recognize trap moves in the market, stay away from them, destroy the other retail traders who have absolutely no clue what they're doing, and follow the lead of the liquidity provider, and again, trade around the fundamental news announcements. Okay, so I'm gonna cut this video off here. I hope you've enjoyed that. Next video, I'm now going to add volume bars onto the intraday charts. I'm gonna combine a volume bar. So for instance, indicators, volume bar, simple as that. And we're going to go into what all of this means in the next few videos. A quick add-on, nice little add-on, and then from there on we're going to break down GBP JPY together, because I'm going to add that into the arsenal. GJ's got some phenomenal movement, especially on the intraday time frames, and we can read it clear as day. Believe me, and really spruce up GJ. And then the next few videos are just going to be over the next few weeks, going into this in further detail and showing you live market exercises or some of the trades I've taken. Now you've got the foundations there of this. We can now go a little bit deeper, and it's just rinse and repeat, confidence, and yeah, so let's go on to the next video. Thank you very much.